Mercedes-Benz opens a new tab as a company, and as the company braces for a sharp drop in earnings in 2025 and will consider further cost cutting. Puneet joins us to give more details on that. Puneet, over to you.
Well, thanks for that, Mahima. So definitely, it's a gloomy outlook that the company is picturing for 2025. But, they also announced their 2024 results, and it was a lackluster year, to say the least. Group revenues were down 4%, while, the EBIT was almost down 31% in this particular year. Naturally, the EPS has also been driven down by 24%, and the free cash flow of the company, which was also one of the major figures to watch out for in these results, were down by 19%, coming at 9.2 billion euros. Now, effectively, that's also had an impact on its return of earnings, coming in at 8.7% versus 12.3% on a YOY basis. What's something is that most of these numbers were, the company has signified that the outlook and the sales numbers were going to be impacted, and it's down by roughly 3% at 19.8 lakhs. The top cars were down 14%. The top-end cars, this includes the Maybachs, the S-classes of the worlds, were down roughly about 14%, while the new electric vehicle sales was also down 9% in this particular year. Of course, there is a lot of uncertainty in the global auto OEM space. They have mentioned in their commentary as well that the ongoing tension between United States and China, while also the other aspect of European Union and China is something to watch out for. Any kind of reciprocal tariffs will be a key negative for something like Mercedes, because most of their cars are getting imported in the US as well. That's a high share. So that will be impacted by tariffs. And finally, just to end this, is the outlook for 2025. It's a somber one to start the least. Sales, the company has mentioned, are expected to be slightly below the 2024 numbers, and the same number has been set for revenue. But the group EBIT is expected to be significantly below. That's what the company has said, and that effectively signifies a more than 15% drop in terms of EBIT that could be expected. In terms of free cash flow, they've also mentioned again that it could be significantly below the 2024 levels of 9.2 billion euros. And that could be as low as and fall as low as 25%. So effectively, it's not a very good outlook. And the numbers by next, the other guys such as BMW as well as Volkswagen will be something to watch out for as well.
Right. Thank you, Puneet, for all the details. Meanwhile, important takeaways coming from Motilal Oswal and Indian Pharma Alliance meet, where the industrial body says that the Indian companies will see minimal impact when it comes to US tariffs. So what they say is, let's just highlight the key takeaways. So they're saying that the reciprocal tariff would have a minimal impact on Indian pharma exports, as India has an export surplus of medicines to the US. While US President Donald Trump is expected to make a detailed announcement on 2nd April, there's a work in progress for a bilateral trade agreement, and the price erosion, if you see, of 10 to 11% annually has already reduced the cost of medicines for the US patient pool. The impact of tariff when implemented according to the IPA would be passed on to patients, thereby increasing the cost of medicines. Government of India has already implemented schemes like PLI to promote indigenous manufacturing, and the Indian pharma products, if you see, accounts for almost 44% of the US pharma market by volume and 47% of generic prescriptions. Thus, according to Secretary General, that is Sudarshan Jain, they say that it would be difficult to replace Indian pharma manufacturers purely by a tariff increase. But we have a city note also on pharma, so they believe that tariffs on Indian generics and API exports to the US are unlikely at this point, and the US, which is a very high which has a very high dependence on Indian generics, are already operating at the thin margins. If tariffs are placed according to city on Indian generic drugs and APIs, which are exported to the US Indian pharmaceutical companies, which might decide that it's no longer profitable to sell certain drugs in the US, and they might rationalize. So the Indian companies might rationalize their portfolio and exit the market. And if this happens, the US could face massive shortage of drug, because they rely heavily on the Indian manufacturers for the generic supply. So let us ask Sunny. So Sunny, all those pressure coming from tariffs on the Indian pharmaceutical companies, what's your view and any counters that you like currently?
Yeah, I think it's not so easy to put tariff on any product which is a kind of which can hurt the larger public in your country. And again, it's not very easy to replace the product at a cheaper cost by setting up a manufacturing immediately in US. Case in point, that if you put a tariff on an Indian product, obviously you are pushing all these companies to set up a manufacturing base in USA. But again, the cost dynamic will change very significantly. Cost will increase, and that need to be passed on to the patients in the US markets. So I think not so easy to be implemented. Yes, obviously over the longer period time frame, very similar to the IT sector. Some manufacturing base may move in favor of the US market, but I think in short to medium term there is no significant impact on all the pharma companies. And if I have to bet my money on the pharma name, then I would like to choose a few names like Blue Jet Healthcare, which is into the contrast media and has reported very good set of numbers during the December quarter. On the pharma side, Cipla is the one stock which we like, a very stable counter. And at the same time, we believe that the growth prospects are pretty good as far as Cipla is concerned. Lupin is another name which is on our radar from a long term perspective.